I'm sure you guys know about WeWork and what the company is all about. So just to let you guys know, WeWork is one of those co-working spaces. Essentially, it's very popular in places like New York City, where offices are very expensive, but at the same time, the coffee shops are pretty filled up, and then you just want to meet new people, right? A lot of gig work, a lot of freelancers, a lot of remote work, but at the same time, you still want to be with other human beings. So WeWork came out. They also cater to big offices and big companies, but they also cater to you. You could spend like $300-400 a month. You get your own little office space. You could have a nice co-working, open air space, whatever you want. And it's basically made for working. And, working at home, it's pretty boring. And big cities, you don't know where to go to work on your computer. So WeWork has that figured out for you. It's kind of like a more hipster and more vibrant landlord. But at the end of the day, it's just a landlord. They really over leverage themselves. They try to push themselves as a tech company. At the end, their stock is down 98%, 99%. And the company's filing for Chapter 11 bankruptcy. But that's not the main issue here. Okay, the main issue is going to be a lot of these leases are going to be terminated. 35 New York City office leases are be terminated as WeWork files for bankruptcy. And this is a big deal because WeWork owns a lot of offices, and many of them are going to be in the vibrant Manhattan district. A lot of it's in Midtown, okay? Some of it is in, Chelsea, some of it's in Flatiron district, and you got a few in like lower Manhattan, especially the Wall Street area, but you do see that most of them are more centered around like, Flatiron, Midtown-ish location. These are all like very high-end, very expensive real estate pieces, and they're going to be dumping a lot of this. And there's a random one in Brooklyn as well. So a lot of these offices are being dumped, and I don't really think New York City can afford to have any more offices being dumped because New York City office market is completely in tatters right now. Not as bad as Seattle or San Francisco, but it's still pretty bad. So bad to the point that you already have the start of office to apartment conversions, which is very difficult to do. Now check this out. New York City 20% office vacancy rates will be persisting towards 2026. This is also just a guess, especially with even big banks and brokerages like Charles Schwab firing employees because of bad economy and a possible recession. If you guys don't know, there's a lot of layoffs, especially very high income layoffs. People making six figs being laid off is obviously not going to afford a co-working space. People getting laid off, they can't be buying any more condos. And as people get laid off, as people move online, and even some moving out of New York City itself, we're seeing a very high vacancy rate, and it will be persisting for a very long time. Now, this is going to be one of the highest vacancies ever. Before the pandemic, Manhattan's office sector never had an average vacancy rate of more than 11% for decades. Because New York City, like Manhattan, it's a very vibrant place, right? The world's banking sector, number one financial hub, the stocks are there, the banks are here, and there's a lot of outside investment. Oh, there's a vacated office. If you just list it slightly below the market value, everyone tries to get it like crazy people. This is one of the hottest real estate markets in the world. They keep building offices in Manhattan for a reason because people actually buy them and people actually rent them. Now we're seeing vacancies being pushed to like 22.7%. And what's even scarier is you have offices in Manhattan, right? A lot of these units, even condos as well, they can't rent them out, but there's still leases being signed. So as long as the leases expire, and every single quarter, more and more leases do expire, more and more of these units and more of these offices become just more and more empty. If you also look at just the residential sector, luxury real estate like high-end townhouses, in the Chelsea district, $2 million price cut. Even cheap studios, 24 grand price cut. $5,000 price cut. Every few of these units, you always see some sort of price cut. There's just basically no demand for a lot of these units. And like super expensive condos like these are being listed. There's thousands of these luxury condos. Don't even be fooled by the actual listing price because the actual transactions are crazy. It's like double-digit discounts. And even cheaper units, you do get crazy discounts like this one. You got like a $250,000 discount. And many of these units are listed for months and months and months without anyone actually wanting to buy these condos. And then you also have this situation here. Remote work is cutting New York City office value by half. Imagine you own a building and you bought it for $200 million and now it's worth $100 million. Not a big surprise because San Francisco has a vacancy rate not far from New York City. San Francisco vacancy is like 34%. That's the official number, but we all know that's more. Manhattan is 22, 23%, but it's, of course, a little bit more than that. San Francisco is selling office buildings for like 80% off, 70% off, 50% off, all from very high-end luxury areas for offices like Spear Street. Charles Schwab is moving out, right? So many of these office buildings are getting valuations cut by half, and it's not a big surprise, right? This is a massive loss of hundreds and billions of dollars. And it's not just New York City as an outlier. Several other US cities are experiencing the same exact thing. And then you also have luxury towers in San Francisco and also New York and Seattle and Chicago, which people don't want to buy. For example, 35 Hudson Yards. This is a high-end condo neighborhood. This is a high-end condo building, and nobody's buying them. They're super expensive. This is not a cheap district, right? If you go to Hudson Yards and you check out some of like their condos, like they sell for some of the craziest prices. Like this one, it's very nice, 2,400 square feet, 3-bed, 4-bath, $6 million, right? And if you look at the actual transactions, they're not selling these for $6 million. Some of them I've heard it's like 20-25% discounts. Like the discounts are absolutely enormous. And also, you have an increase of like HOA, increase of property tax and home insurance, which is also a major turnoff. Like, look at this unit, almost $1 million off, and nobody wants it. And there's so many of these countless units, gorgeous units, which people aren't buying. Like I said, massive layoffs are coming. Who's going to be buying multi-million-dollar condos? Not to mention hundreds of millions of dollars of office space. Nobody wants that either. And you also have the fall of Manhattan sales. New condos in Manhattan fall 40% from the prior quarter. A lot of people just simply don't want to buy this. And if you guys are looking to buy a New York City apartment, just wait a little bit, because the Airbnb guys are actually listing their units for sale. If you guys don't know the new law that came just a couple months ago, New York basically said if you're in New York City doing Airbnb rentals, you can only rent them out on Airbnb if it's no more than 2 guests and if you actually live in the unit yourself. So that is a pretty crazy proposal, and obviously Airbnb has taken a massive hit in Manhattan and the rest of New York City. And we're also seeing condo sales in Manhattan fall 40% from the private quarter. This is a massive bloodbath. On top of that, you also have massive condo projects that are just recently finishing up. Many of these condo projects were actually started back in 2020 and 2021 when it's 0% interest rates. And now construction is wrapping up, and you're seeing a lot of these new condos that are hitting the market that were proposed a couple years ago. Nobody wants them, right? And they're selling for very cheap prices. You could ask them, they'll give you like 7, 8, 9% off, 10% off. And then, of course, you got the whole WeWork situation, which is freaking everyone out. So New York City, I think the New York City real estate market, it's not going to drop like a lot, but it will drop a lot. And with a lot of people being turned off from the real estate market because interest rates are so incredibly high, I think New York is going to probably finally, for once, get property prices low enough for so many people who want to buy it. And office properties and residential property prices, they're continuing to go down. Watch out.